The U.S. housing market is in big trouble, and it is issuing a major warning sign. Charlie Bilello pointing out that U.S. new home sales have hit a 26-month low in June. That is down 43% from their 2020 high. As he says, this tends to be a leading indicator for the economy, and recession odds continue to rise. The structure of the real estate market is important to understand. First, transactions plummet, and then with a lag, prices start to decline. We're just entering that second phase as we watch the median price of a new home down 12% over the last 2 months. That's the lowest level since June of 2021. Charlie eloquently points out that many have been dismissive of the historic collapse in affordability over the past year, but he believes that's the primary factor driving lower demand, fewer transactions, and now price declines. The housing market is incredibly important to pay attention to. It's one of the biggest purchases that people make, and many times it's the largest financial asset that they have on their personal balance sheet. As we're watching less transactions get done and the price of homes come down, it tells us that there could be even worse economic times ahead. Now, one of the major X factors in all of this analysis is what the Federal Reserve is going to do. For the last 8 months, they've been talking about destroying demand, and housing's showing that they're being successful. But inflation is still persistently high at over 9%, and so we've entered a stagflationary period. GDP growth in Q1 was negative. It's likely to be negative in Q2. Housing prices look like they're in a free fall, and there is no point at which they're going to pivot until the Fed decides to change their mind. The Federal Reserve is in control, and they are destroying the U.S. housing market. Until they pivot and until they go back to a loose monetary policy regime, don't expect for there to be any changes. As we head deeper and deeper into a recessive period and the economic outlook gets more dire in the next 6 to 12 months, you need to be prepared, ensure that you've got a strong balance sheet, ensure that you're optimizing for cash flow, make sure that you're putting yourself in a position so that you can survive the bad times, which will allow you to thrive when we get to the other side.